4 to 5,000 people, 100 plus very cutting edge kind of technologies that are demonstrated in the expo hall. So you should mark your calendars, May 16th and 17th. It's always in May every year. This is our 21st TICON, and hopefully you will all get to hear more about it in the coming weeks as our keynotes and our sessions and tracks get all finalized. And that's happening very quickly as we start planning this whole conference from about November. Very good. So without any further loss of time here, I'd like to introduce Wade Pitt. He's the Managing Director at Fort Point Capital. Thank you very much, Wade. He'll take us through this evening and introduce the panel members. Thanks, Wade.
Thanks very much.
Thank you.
Good evening. Thank you so much for joining us. I'd like to thank the Thai Group as well. This is a phenomenal facility. Food is wonderful. And we've got an exciting event for you today. We want to point out today that this is informational only. It should not be construed as advice. Please consult your own advice at the event. I'd like to ask the panelists to introduce themselves.
Is it on? Can you hear me? Okay, and so the introduction is supposed to be short and sweet. I'm John Jeffords. I'm with Hood and Strong. We're Thai members, and we really like Thai, and we go to ThaiCon.
Good evening. My name is Martin Krigler, and I'm one of the managers in Bridge Bank. We are a commercial bank based in San Jose, and many of you already work with us. So,
Perfect.
okay.
Hello, I'm Svetlana Destatova. I'm a partner with Reed Smith. We're an international firm, and I'm based in the San Francisco office, and I'm a member of a corporate and finance group.
Thank you so much. So we're going to try to keep this interactive. There's nothing worse than us just presenting into a vacuum. So again, if time permits, we'd love to take questions during the session, but then we've left some time as well to take questions at the end. So again, don't be shy. I will ask to repeat the question just for the recording. So with that, we'll get started. Kind of one of the first steps is maybe starting off from the banking aspect. So as firms are preparing for that exit, one of the questions people ask is, what value can a bank bring to the purchase or sale?
Perfect. One qualification I probably want to start with is, there are many banks, right? So I come from the perspective of commercial bank. We are not investment bank. We don't invest in companies. We don't value companies. We provide the relationship part of the financing or the path the company takes to the exit. And the value of bank for exit strategy differs, and the main kind of deciding factor how much value you can get from relationship with bank like Bridge Bank is when you actually invite the bank into your team, right? Because kind of the funny example is when I get a phone call, I need $2 million loan to purchase a company, right? Ask what is the purchase price? Well, it's $2 million, right? So it's one of those questions when you have unrealistic expectations. So the value of the bank is really we are many times the first step, right? Because every company needs the account, might need some financing, but might not. It's not that important. And they share the vision, and it's important with the banker, where they're trying to go what the exit is, because you probably, when you start your business, you know what your exit is, so you should. If not, I'll ask you if I'm your banker. Because, we can then first help you, but also one of the biggest value of the bank is that we can bring, we have a big network of other providers like CPA or lawyers, and we bring that with us. We bring people we trust to you as a part of our team, right? So you trust us, we bring other trusted advisors. It's extremely important. And then we also have a broad window into the industry, into the market. We many times bank your peers, so we know what's going on, and we can help you. Again, we cannot give you advice, especially not legal advice or investment advice, but we can share with you the knowledge we have, which might help you to make better decisions.
Speaking of the knowledge you have, and again, evaluating those companies, what is the criteria that the bankers use to evaluate a potential loan?
Well, so it differs in many cases. And we're gonna get to it a little bit later. But typically, for commercial bank, again, we need to buy into your idea. right? It's part of the relationship. We need to be part of your vision, but we don't lend on ideas, right? Or we don't. That really doesn't have any value for senior lender. So it's the cash flow, it's the quality of the cash flow, it's the assets or lack of assets. It's also, again, if we come in later stage, what your team is, right? Are you privately owned, so maybe you don't have any investors, or do you have a venture capital, in a company, or private capital? That all determines how we value the company. And so we are usually on the, right, if you're selling your company, we're gonna guide you through the process to exit, and then we're gonna exit with you in many times. If we are on the purchase side, it's much more stricter. We work with the CPA, with the lawyer, and we really strictly look on the assets, on the cash flow, and those type of parts.
Martin, once you get in the diligence process, when you have a client that's selling, how do you interact with the buyer? Do they ask you questions? What type of information do you? I'll speak louder. What type of information? What type of information do you provide? What type of questions do they ask? What's your role then?
Well, so we are on the.
If you're on the
sell side,
right?
It actually is somewhat limited. We help our clients behind the scenes to compile or maybe guide them or provide information because we keep records. We have to. But our ability to disclose is actually limited, right? Because there's usually NDA. The selling party usually choose what they want to share, right? There's a specific diligence list, which the lawyers.
But you can be helpful.
We can be.
So I think the message here is that call on your bank when you need that type of information because they can facilitate gathering it and help you out.
And
save you time.
Yes, and then back to my first answer, make it early, right? I mean, banks and nobody likes surprises, and if you give us a lot of leeway, we can help you, right? Rather than, hey, I'm selling tomorrow, right?
It sounds like the earlier you come into the process, the more help you can provide.
The more value we can provide. Yeah.
And that leads me to my final question for you, which is obviously, besides yourself, which is a great differentiator, how specifically does Bridge Bank differentiate itself from the many banks that are out there?
I mean, that's a great question. You really need to pick the right partner, right? And then again, I was talking about investment banks, but there are a lot of small companies or startups start with a checking account with Wells or BofA or retail bank, right? You don't have your relationship banker. It's a transactional business, right? Again, with banks that focus on companies like yours, you can develop a relationship. It doesn't need to be a loan. It doesn't need to be, there are no minimum deposits. It's truly about, we want to share the path with you. We want to help you achieve the goals. That's the fun for us, right? So you need to pick up the right bank, and don't be afraid to ask for references, right? The bank you pick should already have knowledge in your industry with your size of the companies. Not a big part, and I'm not gonna be making plug for Bridge Bank, but you need to make sure that it's a bank that can support you through all the cycles, right? Good and bad, and also all the stages of the companies. So you have you're just starting, you have the first revenue, first account receivable, right? You don't make any money. Is it a bank that can help you provide your services or lending even? And then through all those stages, right? When you have the first capital in, right? Can they support you then? Because many banks have very narrow focus, and then once you graduate from the initial program, you are out. That's not what you need. You need somebody who's going to be with you from A to B, and B is the exit.
Wonderful. Well, that's usually kind of, I think, of the start of the company is establishing that banking facility. One of the things I find banks that the companies move next to is actually establishing the books and records, especially on the tax side, which leads me to you.
Oh, thank you.
So on the tax side, I'd love to ask you a few questions about the main planning considerations involved in selling a business.
Well, I think it's if you're thinking about planning and you're thinking about a transaction, and the message you'll hear from your banker, the message you'll hear from your attorney is you should be thinking about that really early. When you start a business, you want to get the business going. You're worried about covering payroll. I heard stories about covering payroll with credit cards. That's
I think that's every small business's badge of honor. Who's paid payroll with their own credit card.
Yes. Well, I'm not sure about the debits and credits on that, though. I'm going to have to think about that. But the point is, you know, if you're organized and you have your advisors with you, they're going to help you get on the right path. When you're working with an accountant, you know, as Martin has said, you know, accounting firms are different sizes. You know, you can have your very small shops where you have a sole practitioner, and maybe they're primarily tax driven, and they'll help you with your corporate taxes and maybe help you with your individual. But you know, they may be somewhat limited. They may not have the experience, or maybe they do. But larger firms, they have the ability and the resources to help you guide through that path. When you look at a company, you know, one of the very first things that you decide when you organize your company, what kind of company am I going to be? Am I going to be a corporation? Am I going to be an LLC? You know, and that, once you make that decision, that really puts you on a path. And when you're thinking about exit, because there's different considerations if you're an LLC, which is a partnership, or if you're a corporation, or if you've done something, made some elections in the rest.
The different characteristics would govern which one you go into.
Well, yes, and you know, for what I've seen and the type of businesses that are out there, the primary vehicle that everybody uses is the LLC. And the liability company is very flexible. It's very efficient from a tax perspective. You know, it's on the exit side. It's the type of structure you want to be. Because generally, you know, when you're a partnership, when we go to sell your company, you don't care if they want to buy the company, they want to buy the partnership, or if you want to buy assets. For tax purposes, it's the same. The result is the same, and it's one over taxation.
Almost leads me to my next question, talking about the differences, the advantages and disadvantages between the asset sale and a stock sale.
Yeah, there are huge differences. And, you know, we can't go in. I don't know the kind of the level of the audience here. You know, I want to kind of be able to respond to why you guys are here. But you know, if you're a LLC and a partnership, you're in a good spot. Then you need a trusted CPA that can help you negotiate and understand the implications of what you're doing. You know, if you're going to roll over, you know, and try and do a tax-free, there's some considerations there. And if you're going to take a note, you know, there's other considerations there. So these are all part of the, you know, some of the details that you'll get into as you think about a transaction. But before you get there, and the point I'd like to stress is, you also need to get your house in order. And your banker's going to be, if you have a banking relationship, your banker's is going to want the same thing. You're going to want good accounting records. You know, you may not be big enough to have an audit. Maybe you have a review, but you need to have your accounting house in order. You need to understand you need to have financials that somebody can look at, hopefully on a monthly or quarterly basis. And if you're not organized like that, and you're thinking about selling, you're probably getting a
Professional organization with everything set up. So, no disrespect to the CPAs, they probably didn't start out to say, I'm going to have my books in order and have that all set up and ready. So, what have you seen? How do you help folks get their records audited, and what are the advantages of having crisp, clean records?
Well, it's a process. Okay, for a business, you know, audits and reviews are very expensive. You know, and it's an expense you're going to look. You know, if my bank's not requiring it, why would I want to do this? But before that, I think if you're going to run a successful business, part of that is understanding your business and having the records and the budgets so that you can manage and run the business, so that you understand where your profitability is coming from. You understand your cost structure. You know what percentage your payroll is of your gross margin. These are the operating metrics that you can develop if you have good accounting records.
So let me jump in here a little bit. Let's say, take the example of a firm that hasn't got great records set up. Again, the idea is they're getting ready for a sale. Now they've got to rejigger these numbers. Now the asset prices has changed. Well, usually when I get ready to sell, I'm going to do a handshake deal, and now my numbers have changed. Now I've got to change that number. I'm probably not going to be happy. Probably not change it for the upside. So can you guys talk about what you've seen? Because that's been happening in the past.
It's very disappointing for you, for sure. And then that's why the messages start early. You know, it's the same when you get counsel involved, and say, for example, you're not incorporated as the right form, but accountants can usually help with that because you advise. As part of that is tax considerations as well. So, so you really work together, and then in some ways, when we sometimes come in, when we are on the buy side, and we start looking, right? Because the other message will also convey to you, if you are selling yourself, be prepared that you'll be looked at carefully. So you need to get comfortable with that your records will be available, because that is, you know, your buyer will be evaluating you based on what you're providing them. So that's the first message. And then from the lawyer's perspective, when we represent the buyer, and we find issues. So we have a hefty stack of what we call cleanup resolution. When you go in and basically clean up the stuff, your contracts haven't been signed properly, and material stuff, say your top 3 customers, you know, that matters. Your employment engagements haven't been documented properly, and it's all of these things, they need to take place. Usually, probably the bylaws you'll ask for when they want to, it's part of our KYC compliance.
Right.
Used to not be like that. You actually would not get anything done on bylaws for decades. But it's not, you know, so lawyers will help you with that and get all of that cleaned up and get your, you know, you don't want to find out once you're in the process that you're missing those key, it doesn't make you look good. So it's easy to clean up, so do it. And even better, get it done from the beginning. And the other thing we should mention, actually, because many of you probably are in the technology space, so it's protecting your intellectual property and protecting your technology early on, because that is where the value is that you'll be trying to capitalize and capture in the exit. And I have one of my partners here, George, who is specializing in technology, and you've been through the M&A process on the IP side several times. Can you maybe speak to that a few words?
So kind of echoing what some of the other speakers have said is that when you sell your company, not just for IP, but generically, you'll have to enter a merger agreement. And one of the big things about that is it basically has a whole list of items that you call representations and warranties that say everything's perfect. All my employee issues are perfect. All my accounting is perfect. And all my IP is perfect, is what you sort of represent that. So one thing to think about is that you can't really hide anything, because the basic premise is that you're representing everything's perfect, and the only thing you can really do is you have what's called a schedule of exceptions. You can sort of confess items where there are problems. So you want to have, and kind of echoing what everyone else has said, is that you want to keep careful records of everything, so that if maybe the world isn't perfect, at least you know where it's not perfect. And then in the disclosure process, sort of as part of the M&A, the due diligence, you'll have to tell the buyer about those things and get them comfortable. And then for your own protection, you'll list all those problems. And if you actually get them listed in the document, then you're not responsible for them. You can get them kind of upfront and listed. So kind of going back to IP, so for IP, you want to make sure that everything is cleaned up. You want to make sure you own your IP and also know whether there's issues if you're infringing IP. So kind of for IP, there's sort of dual considerations. One is you don't want to get in trouble with somebody else's IP, and then you want to own your own IP. So, generally you're going to work with your IP attorney on those things. So that's kind of a general answer. For owning your own IP, a lot of it starts with the very beginning. If you start your company, you want to get the IP into the company. A lot of that has to do with having proper agreements with your founders and your employees, that everything they do gets owned by the company. So that's one of the fundamental issues. And then for infringing someone else's IP, that comes to working with your attorneys, or if you know of issues, you want to just make sure you're deliberate about those and kind of keep records of what you're doing, so that you can think about what are the risks in those areas.
Thanks so much.
Let me just quickly add from the banking perspective, and what Svetlana said. I mean, more due diligence the buyer needs to do, more expensive it is for you, not only in the cost, but the price goes down, right? So the initial decision of a company to purchase your company or buyer to purchase your company is really your idea, right? What are you accomplished? What are you doing? What is your product? Where you, right? So that's right. But if they discover that there are issues, right, they will start looking closer and closer, and they will assign more time, and they might even walk away. And so even before they start the due diligence, they look, who your partners are. I mean, I've seen it over and over, and I do it when I with my clients. Who is your CPA? And then if I know that it's, for example, Hood and Strong, I don't go in detail and ask for every disclosure and everything. I actually trust the number I'm seeing, even if it's interim statement, because I know that the CPA firm has a tradition to work with the client as an advisor. It's not just prepare statements and then disappear for a year. I can really trust it. And then your buyers will do the same. So picking up the right partners, right, and you making the right due diligence about who you're choosing from the start, I think is a great advice.
Perfect. And John, one more question for you. Excluding everybody else in this room who has perfect audited statements, I'm quite convinced of that. Can you tell me how somebody could improve on those statements, how they can basically take that from there and say that they don't have audited statements or?
You mean a situation where a client does not have an audited
Correct, they don't
statement?
have audited statements.
So what's going to happen in the sales process?
Right, or how can they prepare for that sales process?
Part of it would be to actually do your own due diligence, or get your CPA to help you do your own due diligence and look at your financial house. That would be looking at your tax returns, and see. And you may think that tax returns are old, but statute's 3 years. So you want to take a look at your tax returns, understand what positions have been taken on there, what potential issues may be with there. The other thing is you want to get all your records together, because when you are selling a company, typically you like to look at least the past 12 months. 24 is even better. And so you want to be able to have the bank statements, have the accounting records to support your financials for the past 2 years. And then you should have somebody assigned familiar with your accounting to be ready to help the person that's coming in. You've got to have somebody there that's knowledgeable. That would be your in-house controller or chief accountant or whoever's doing the books.
Perfect. I'm going to ask one quick question, a bit of levity. What's the craziest expense you've ever seen a company try to get away with?
Well, let's see.
You can see your brain turning now, can't you?
Yeah. Well, I'll tell you some I have seen that aren't very pleasant, and that's where a lot of trust is placed on say certain people in your company. We've seen situations where the babysitter became the accountant, and then suddenly she was getting 2 paychecks for several years. That was not a good situation.
Yikes.
Funny expenses, they usually hide them from me. There's so many, and they're certainly not going to tell me about it. So if they, and so I can't really think of some. Let me think about that. It's a good question.
I'll come back. I was recently with back in Alaska, where I'm from, and family friend had a company, and the family friend's daughter had the friend who's now the CPA, and the CPA happened to be involved with the daughter's boyfriend, so that ended the relationship as a CPA very quickly. So I'm moving on to the legal side, Svetlana. What should a company do to get ready to sell it or recapitalize?
Well, we've already mentioned getting books in order, getting financials in order, protecting your IP, really critical, and then also understanding what the company is worth. Recapitalize, you mean to exit, just for any exit?
Right.
Yeah, so it's important for you to know what the company is valued at. So for that, there are independent valuation firms. Also, I think we have an investment banker in the audience here. We can assist with that as well. And then one other thing that I've seen in several businesses, especially smaller ones, is the way the business is run, it's very much dependent on the founder or founders. So when the people leave, it's a problem for the business and a problem, therefore, for a buyer. So as you're structuring your business, think about that as well, because that's part of your exit strategy. So like, you need to think about, wait, now let's just speak about that. Once you exit, what do you plan to do? Do you plan to retire? And if you do plan to retire, then think about that as part of the planning process, because it probably will be, if the business is you, like, what do you have to sell? So, and when you see that, when you on the wealth management side, do you advise folks how it's not just, you don't just structure, right? Or like, here's a pot of money, or
And that's a great point. I mean, I think we all need things to do. My grandfather was 96, and he had a little restaurant, and every morning he said, I gotta make the bread. If I don't make it, who else is gonna make it? So I think that's one of the more important things to do is saying, what are you gonna do next? Because I'm pretty sure you're not gonna go stay on the island. Maybe you are gonna retire on the island, and that's great. But if you're gonna start the new tech company, let's plan for the resources to provide that. Let's not blow it on an emotional investment. I don't know if you get, some of you might remember Eagle Computers, right? Emotional investment. The CEO, the day of the IPO, went out and bought a Ferrari. Was killed, and he was actually killed with a salesperson, not for the Ferrari, but for the yacht that he was going to buy. So again, that happens a lot. So you want to create a reasonable, rational plan before you do those purchases.
so I think those are the critical considerations. Of course, from the legal side, what we see is getting the stuff ready, because we will help you in the process to put those disclosure schedule of exceptions together, and that is a very laborious process. We have diligence rooms where you have to put stuff up so that your suitors can see what your business is up to, kind of contracts you have, what documents are based. That's where the financials will go as well. It depends on how you're running your process. To hire an investment banker, it may be just one-to-one introduction, or you may put on an auction, right? It just depends on the company size, on what it is that you guys are looking for. Because you'll be interviewed if you're involving an investment banker. What do you guys want to do? How broadly do you want to cast the net, right? Or it may be, you may be talking to Martin, and he'll tell you, oh, I have another company. Or maybe you guys should marry. There we go. So that way you avoid an investment banking fee. So,
That actually leads me on to
those are really rare situations, very rare. And then other than that, I think from the legal perspective, the disclosure is extremely important, very laborious, like I said. And I think, also as part of the process, getting you ready for sale will help you clean stuff up. Ideally, it'll be cleaned up, but if it's not, then we'll help you clean stuff up. Some things, and the questions that you'll be asked are things like, well, what type of exposure do you have? What type of potential lawsuits you have? And we were talking about, you had a great example. Maybe you can share it with the audience.
Which one was that?
The class action one.
Oh, yes. And so, we're in California. California has crazy rules around paying your employees and meal breaks and that sort of stuff. And so a couple of years ago, a good-sized deal going on, and during the due diligence, part of it became into the HR function, and it was we discovered that there was a overtime and wage issue, and so that the company wasn't that large. It was less than 150 employees, but it suddenly became a very big issue, and because these sorts of labor issues quickly become class action. When they come class action, they would just the numbers just go exponential, and it actually killed the deal.
So what I'm hearing over and over again is it's better to do it right the first time than to have to
Well,
redo
especially
it.
things like that. It's, the cost of it was probably fixing it at the beginning before it grows into such a humongous stage. It's very little, actually. And that's what, owners don't realize, that the investment is so small. Because then at the end, it kills a deal. Nobody wants to pay that price at that point. It's just not worth it.
Exactly, and so really the kind of the takeaway from that was the company said, okay, we step back, we're going to clean our house up, and like you say, that's a very small number relative to the exposure of a class action lawsuit, and that's really good advice.
So, and that's where you get, specific. So what your counsel would do, they would talk to you about your business and identify areas, where you should always look into labor and employment issues. They always look at, general corporate setup, just proper formalities, You probably don't, it's rare that the small company does board of director meetings regularly. It's just, it doesn't happen, So the slate of directors is probably not properly implemented, the officers are not properly authorized, so just go and clean it up. You clean up your unsigned agreements and things like that. So, and then you're in a much better shape. When your suitors come, you look nice and stiffed up.
So you've answered this question, and I know I'm gonna get the consultant answer of it depends, but if you're all entrepreneurs, people that are getting stuff done day to day, how long does this take? How long does the process take?
The sale process?
Sales process.
So I'd say probably 3 to 6 months. That's the average that I.
Easy, yeah. Yeah, and that's just that's after you've gotten everything ready to go and you're ready to go out to market. It's easily a 3 to 6 month process. Because there's going to be bumps along the road, there's going to be stops, you may get buyers that walk away.
And in your experience, what do you see in your deals?
I would say 3 to 6 months minimum when you're preparing for it, and also it depends on how many skeletons you have.
And they tend to come out.
Well, you want them to come out, actually. The last thing you want is
Them
right
to
at the
come
last
out during
time.
the process.
Yeah, the last-
That is the point I was going to make. When I talk to somebody, I say, number one, be totally honest. Tell me the worst thing that is going on, and if you can tell me now, I think we can solve it. We can fix it, we can address it. If you don't tell me now, most probably we will fix it.
Well, because if you have hundreds of pages of exceptions to your representations and warranties, and then so what does the buyer do? They need to read it. They need to understand what you're accepting. Yeah, and to them it just becomes less attractive. If you can clean those things up in the process, it's better.
The goal, if you think about it, the goal at the end of the day is to have the largest deposit, right?
Yep.
That you can. You want to maximize your value. You want the company to continue. You want the buyer to be happy. 6 months later, you want the buyer to be very happy. Because a lot of times these deals will have a significant escrow. They may have 10 or 20% in an escrow or in a seller note with some sort of performance guarantees behind them or hurdles. So the last thing you want, or the thing that's a success, is to have it organized and have it handed over and be successful.
And you don't want that escrow to be large, and the more issues you have, and the more money will get put in there, and then basically if you lie, that's the recourse that the buyer has. If they're, substantial lies, it's material lies.
Well, it sounds like this whole process is a process of really getting married. The idea is that you want to put all this stuff, relationship based on trust. But at that point, you're putting yourself out there as you're going through that sales process. You're very exposed in terms of this is your baby. You're now turning it over and you're showing everything you have. So how do you protect your clients during that phase? How do you protect them from that confidentiality?
It's the confident, it's the NDAs. We do those routinely. So you talk to your counsel, and we help you execute one.
Well, tell me more about that, because again, that can get much more involved in terms of, how do you protect the business, your key employees, your customers? How does that get spelled out?
Well, the question is, I think, from the buyer's perspective, like, do they want your key employees, or do they not want them? Or are they just buying your technology to basically eliminate you as your competition? That happens. They may not want your business. They see you as a threat. So it just depends. If they're buying and, operating business and the employees are critically important, then there'll be, agreements that they'll be negotiated as part of the process. So, and I think, so when my partner mentioned that there are representation and warranties, there's an indemnification provisions, basically, to do something wrong, you'll have to pay for it. And then there are closing conditions. And so all those agreements that you want to happen to protect your business will be part of the closing. You'll just say, and you negotiate that. And good counsel will walk you through for your type of the business, for, the size of the business, what a reasonable expectation. Also, investment banker will do similar things because you run stats on, the kind of comp, the kind of holdbacks, the kind of contingent compensation, what is appropriate. So, and they'll tell you, this is reasonable for them to ask, and that's not reasonable. And you'll just speak to the counsel. So.
Well, now that you've made the sale and you've got this, big amount of money that you've now created this liquidity event. What do you do with that? Well, I'm going to take off my moderator hat for a minute and talk from the wealth management side. Now, typically advisors in January want to tell you about the state of the markets. I think it was Eisenhower who said, I've always wanted a one-armed economist because they keep on telling me on the one hand this might happen, on the other hand this might happen. I might give you the same answer. So again, you probably have as much insight in terms of what the market's going to end up in 2014 as anyone. But that being said, the state of the industry, I think it's actually appropriate that we have a movie out now called The Wolf of Wall Street. I think it is broken and it is very damaged. I think people in finance, and I'm talking on the wealth management side, not the investment banking side, but wealth management, they're up there with car salesmen. I think there's a very different level of standard there. There's, most advisors are still out in the standard suitability, where the duty is to do what's suitable for you, but not necessarily in your best interest. That creates a clear conflict of interest. My duty is my company first and you second. That's a problem. Because, you know what, I think you're going to get shortchanged. There's also, there's more and more advisors out there that are state and SEC registered, or a fee-based advisor, or the duty of fiduciary. But the lawyers tell you what that means. We have a higher duty to our clients. We have a legal duty to do what's in your best interest prior to our own. So at the end of the day, same thing on the investment side. If you're working with an advisor, ask them what are they doing differently today than they were 10 years ago. Are their investments mostly the same? The industry really hasn't innovated in the same way that your companies have innovated. Frankly, I think advisors should be more like you. We probably got into this business to create change for the world. And I don't think the wealth management side has caught up with that. So I don't mean to be too controversial there, but I just think you need to find an advisor you know and trust, especially during that time. So that usually translates in the second question, is what happens when folks do have this big amount of money, they've got the sale that goes through. Well, I kind of alluded to, people typically invest emotionally or rationally. Emotionally, if you go out and buy the Ferrari with your yacht salesman, that's tough. I'm not saying don't do it, but just make that as part of an overall consistent plan. Because let's face it, if you don't have a good tax plan, the biggest expense you're ever going to pay in your whole life is taxes. Pay what's appropriate. Find a CPA that's going to create some plans around there to pay what's appropriate, nothing more. An estate plan, that's just the easiest thing you can do for yourself to protect yourself and your family. Unless you think the government is the easiest form to translate your goals, wishes, and assets to your next generation and to your charities, the things that are important to you, you need an estate plan that keeps up with you. And finally, obviously, on the investment management side, I think you need to find an advisor you know and trust. It's often said people can talk about more intimate things, and the last thing they want to talk about is money. I mean, it's a very interesting topic. People have very different values on it, so you've got to be willing to share. In the same way with you doing with all of your teams, you've got to be able to share some pretty serious secrets. So to wrap that up is you've got to find somebody you know and trust, and make sure that you've got an innovative process to maintain that wealth. I've got a secret to share with you. You're going to make, most likely going to make so much more money doing what you're doing than you're ever going to make on the investment side. So it's critical we allow you to do what you love doing. We just want to make sure that we participate in the markets to make sure that you provide for your family and for the next deal. I mean, you guys are the ones changing things. We're just basically along for the ride, trying to help you stay the course.
And one thing you implied, but I think it's important, find the money or wealth manager before you get the pot of money, right? I mean, again, early they're gonna help you to find the strategy, because you wanna immediately execute upon sale with the CPA. But also you want them to be interested, again, in you, in your vision about you trying to accomplish in your life, rather than in the big pot of money. It's very easy to get interested about $10 million in your checking account.
It's funny because that happens.
But, right.
So to wrap this up, let's talk a little bit more about the state of the M&A market. Who wants to jump on that one?
Sure. I'll start. Well, I'll address kind of the both because less aggressive the senior lenders are, more capital you need, right? So post 2000, there was a lot of money in the market and lenders were doing crazy things before early 2000s. Then 2008 hit and everything actually shut down. Good news is now that banks figured out how to navigate this new environment with the new government regulations and everything. So in the last couple of years, I've seen much more competition on the lending side, which translates to that the banks are more competitive to finance the transaction. I can tell you that good 60% of my transactions over the last 24 months are M&A transactions. So there is money how you can do it, and it's again going back to the trusted advisors. It is, many times you hear from, if you just get somebody last minute, hey, you need to do equity, go to my firm, I'll pay you everything, I'll take 80% of your business, but I'll finance it. Well, talk to your banker. You might discover that, hey, you can make it 50-50, right? We can, let's say, you're running out of liquidity and you're trying to increase your valuation, now you need to sell. Well, maybe you can get the bridge loan to extend the period before you need to raise the money, right? When you finance certain piece of your operation, which normally would pay by cash, right? Let's extend your liquidity. Let's increase your valuation by waiting another 12 months. Again, if you have the right partner who understands your business, has been there the entire way, believe me, they're gonna help you, right? From the so we talked a little bit about the equity, which is one extreme, right, and the bank is the other one. Then you have the mezzanine players. I've seen also big increase in the interest. There are a lot of funds, especially on the private equity fund. They are hungry. They are looking for businesses. Again, most of my transactions they are interested. So there is money to be found. And again, subordinated debt or mezzanine debt, especially if you're buying, is another way you dilute a little bit or not at all. You pay a little bit.
It's expensive.
Well, it's expensive, but only relatively, right? Don't look at the sticker price, right? Yes, it's a 16% interest rate with 2% PIK or maybe warrant or something like that. Yeah, but compare it with the 30% equity, which you need to give to the equity investor. So, right, this is a great actually market. Again, economy is humming again, especially here in the city. There's a lot of money, there's a lot of interest. I see a lot of. You also need to decide: do I sell to venture capital or private equity, right, which is one multiple, or do I sell to strategic partner, right? Well, strategic partner might be a little bit more painful through the diligence process because they might not be as sophisticated, but you might get much larger equity, right? So again, talk to your trusted advisors, go through this option, do it early, and you're gonna get the best return you can.
But strategic partners are not necessarily interested in operating a business. We have several clients who are just interested in eliminating this competition, and that's why they're buying them up. They're buying up technologies and just killing them.
Also high multiple.
Yeah, So and then you just need to decide. As a seller, what are your goals? Is it the vision that you're so excited about? Because then it's devastating to actually see that happen to your business. You've been building and investing so much to get equity in. So, and I think overall, like we've all read statistics, that it's actually a lot slower for the M&A activity than people have been anticipating. And but the credit markets are so favorable and the interest so low. At the same time, the credit underwriting processes, I think, have tightened. And that's where having a good relationship with a banker is really critical, because they're your basically face within the bank. And you work with them, and hopefully they make it happen.
John, do you have anything to add?
Well, no, I think they covered it. But the point I would make is Martin's talking about the banks being in. So there's money out there. There's buyers out there. So the market is there, and businesses are hungry to grow their top line, and the American way is to acquire times and build it, and or start with a platform and then go out and do add-on acquisitions.
And also, private equity firms, they have, I'll speak louder. They have a certain span that they are interested in keeping the money in the fund. So, and it's like 3 to 5 year strategy, and then they have to turn it over, and then so that's another thing to keep in mind. What we've seen is a large inventory that they're pushing out. Oftentimes they sell to themselves. I mean, so it's a lot of considerations. But then again, when you're ready to go out and start selling, you need to identify who your suitors are, and then you go from there.
So everyone made a very, very good point. When you're picking the partner, especially equity partner, if you compare traditional VC, and I don't want to generalize here, but the goal is to grow you as fast as possible, and third, right? That not might be your plan. You are looking for the equity investor who will help you to achieve the vision, right? Pick the right investor, right, to help you the patient money if that's the goal, right? Help you with the technology, because venture capitalists might just turn around and say, to eliminate competition, I'm getting high multiple, I'm out. That's it. That's they doing. It's done. You know, there are a lot of patient money. I have a client, and the equity firm is there now for 18 years, something like that, and it's helping to achieve the company, the goal. The owners, so now they are minority, but still they are following their plan. I mean, I think that's key for you as who has the visions and build something great.
We have time for one more comment.
Well, I had a couple thoughts. You know, if you think about Berkshire Hathaway, probably the most valuable company in the country, and he buys and holds. That's what he does. Have any of you guys ever had See's Candy? You know See's Candy? He's owned that since 1969. He bought it, and he leaves it alone, helps manage it a little bit, and it just grows.
That's why it tastes the same.
And key ingredients. It's got great ingredients.
He also said he has a helpline if he tries to buy another airline to prevent him from buying an airline again. So now actually comes out the most exciting part of the night is I'd love to open it up for questions. So when you get called, you have a microphone nearby, otherwise I'll repeat it. But that first question.
You made a good point about not just thinking about strategic partners, but also about private equity firms. But there is this beautiful Silicon Valley, and there's no end to, doing all the rituals and the coffees and the non-stop discussions. What kind of trustworthy forums, if any, would someone look at to sort of identify which could be the most interested private equity partners, not just from the deal perspective, but also from a longer term perspective? And also, similarly, on the strategic partner side, how would you go about identifying and approaching the right partners and sort of target them well?
Well, I'm gonna repeat myself, but this is, I think, a great message. Have the right partners, right? Because you are right. It's the same as we do, networking. It's yes, you can network with everybody in the valley. I mean, there are a lot of people, right? But those are not the right ones. You wanna target the right people to talk to, and well, we can many times help you, right? Because we have pool of companies like you. We have private equity firms. We can help you start, and you meet more people, and then you can be a little more targeted, right? And many of us have in the companies, I'm a manager, but we have we call connectors, and I have one in the audience, Gloria here. That's what she does. That's her life. She connects the right people with the right people, and you wouldn't believe how much business and just a couple of years she was in the industry she made. I mean, right? Because if you trust me and I was your banker or what a provider for the last 5 years, and I introduce you to somebody, some of the trust transfers, right? And it's my reputation, so believe me, I'm gonna introduce you to the right person.
Well, it's a referral. It's a referral-based business. Same with CPA or lawyers. I don't know if people cold call. Do they cold call you?
Not really.
No. So I think, and also with the PE firms or VC firms, look at the track record. Do the research, because you can see how they've behaved themselves historically. That tells you something.
So I have a two-part question, which many of the startups would like to probably ask you guys. One is that when you're on the sell side, and suddenly somebody approaches you, and it's very hard that in the first 15 days you know something, but after 9 months of due diligence, and when you pay the lawyer fees, and you also pay the CPA, you may have or may not have a banker. What is the advice you would give startups that want to negotiate early, that to someone they don't hit a $500,000 bill in 9 months and the transaction didn't go? That is one. The second question, which I will also ask, related to that, is what would be very helpful for a lot of startups if you put some ballpark numbers, like typically a transaction takes 6 months, what the typical CPA expenses will be, and what attorney expenses are, because getting into a deal is very attractive, but what happens during that time could be a sticker shock to a lot of people.
Well, I'll start because I'll be probably the shortest. First, bankers are not paid by hour. So even though we technically don't,
As opposed to.
I'm not gonna mention any names. So and then we are kind of, we can give you, the first round, but you get some offer or you had a plan. We can, to a certain extent, tell you is it realistic, right? Because when we decide to lend to the company, even though we don't do market valuation, we do valuation, right? Because we assess our risk. That risk translates in how your buyers will look at it, right? So again, we don't charge for that. So that can be first run. And if you have the right partners, both on banking, lending side, the first discussion, hey, what do you think about this? It's always free, right? And it's usually gonna be that one before you start writing the checks.
I think with in the legal industry, and one of our leading departments is the alternative fee arrangements, and for the M&A deals, we pride ourselves with offering certain, when benchmarks are met or failed deal discount, like busted deal we call them. So we work with you, and the firm prides itself in being a partner to the clients. So that's, and this deal doesn't go through, the next one will, hopefully, after we clean this stuff up. So, there can be no promises. We just have to sit down and figure out what it is. There are hourly rates, which is a usual arrangement, where you have, for more experienced people, there's more money, and less money for less experienced people. But I think generally it just depends on the volume of work involved. Although, we've done some, different components of success, like so we structure it very, very flexibly. And so we hear you, like, if your concern is, hey, we want to make sure your interests are aligned with us, so you're not just like cranking the meter. Yeah, like we have arrangements for that to address that issue. We have rating systems with some of our corporate clients where they rate us and then we get a bonus for it. And it's like purely discretionary. You don't have to pay. If we do poorly, then we get hit. So things like that.
Got a few more minutes, so I want to make sure we get through to
I'll,
everyone.
is that, in terms of, if you were asking about provisions to negotiate early, that's a hard question because it's so dependent on your business. So I'm hesitating to answer which specific issues to pre-negotiate. That's hard. You have to sit down and actually talk about what matters for you.
So the short answer is it depends.
Yes.
Well, and I think
If you've got good advisors, that'll be your first call. Your first question, talk to your banker, your CPA, and or your board if you have a board. Maybe you don't, but there'll be a good sounding board. Fees, costs. Figure it's going to cost you if you've done your part. If you've got your company organized, you've got a clean set of financials, you've got your issues done, then you're not going to need a lot of lawyer time or accountant time. But rule of thumb, 5% maybe for legal. I haven't seen it more than 10 unless it's a really small deal and you've got issues. But maybe 5%. Think about when you sell a house. What are your expenses when you sell a house? Typically cost you about 5%.
And again, it's if you've been investing over time on getting it all cleaned up, and there isn't that much, because you've been really spreading those expenses over time, and there aren't, no class actions to deal with.
Got just a few minutes left. I want to answer a few more questions if I can.
You mentioned that you do international transactions also. So can you share some light on that? What's the different kind of challenges for international transactions?
Yeah, time difference is the first one. I think once we closed the deal when we were in Israel, Luxembourg, New York, California, and Abu Dhabi. So we were trying to pick a closing date. It was really hard to do. The firm has 23 offices globally, and where we don't, we have local partners. So for instance, we have an India business team. We work very closely with Amarchan. That's our preferred provider. We collaborate. So yeah, internationally, their tax considerations are critical, critical. And I think if your company is more mature, it's not just operations here. You have cross-border stuff going on. You'll probably be talking to your tax and accounting providers ahead of time how to structure it in the most efficient way for you, not to be it's not tax avoidance. It's just maximizing and properly, you know, figuring out like what are your options and just picking the most efficient
There's just a few minutes
structure.
left, so John, do you want to add anything more to that?
Well, it's kind of a general question, but if you've got international operations, and I assume you're based in the US, then you're gonna have transfer pricing issues, and hopefully you've already addressed those before you start thinking about a transaction. And that's where we're in a good accountant and attorney can help.
And IP licensing, very important internationally as well. The IP protection issues. So.
Question here in the front?
Yeah, I'm an entrepreneur, and basically I try to spend as little time as possible dealing with any of the issues that you're referring to, because I want to be working on my business. So when I set up the company, I used a CPA consultant to get the structure of the company. Then I found an online agency which did all the incorporation process, set it up for me in Delaware, and they send mailings periodically for all of the filings. They take care of all of that. So now I'm about to hire my first employee, and I heard that there are HR companies that you can outsource to, and I want to see if any of you are familiar with them, can recommend any, so that we don't have to deal with any of the HR issues.
Sure, we've got just a few minutes. If you guys wouldn't mind actually just following up directly
That's
to
fine.
specific
We
issues,
do,
you wouldn't
yeah.
mind.
Yeah.
Gloria actually will be happy to give
Be-
you a
right
referral.
behind
you.
There's the yeah.
Okay, yeah. One more question in the back. I'm going to run back here.
It's nice that we heard a lot of advice from you guys. So this is a particular question to a banker, right? Who has got the most experience for exit. So when you get a foreclosure on business, how you exit from there, and what is the procedure you adapt, right? Based on law, based on your security of getting your minimum money back, right? If you give some of your experience on that one, so people who are in trouble get some idea how to exit.
Right. We were talking about the positive exits with the big pot of money, but there's much more distressed exits, right?
Foreclosure.
Foreclosure, you know, there's just the business failed, right? And you have investors, you have a bank loan and everything. It's a very, very difficult question, right? Because it depends exactly what position, right?
You have already foreclosed a business and it becomes your baby.
Oh, I see. We foreclose on a business.
Oh. He owns it, you mean?
I'm not sure he wants to do that.
Well, so generally, and especially speaking, you know, that some banks would deal it differently. We don't necessarily can own business, right? For real estate, if real estate is involved, the banks can own real estate up to 5 years, and then we just do the normal get appraisal, try to get the appraised value back, write off whatever is the difference. On businesses, it's not. It's foreclosing mean that we do go through the UCC process, and then Svetlana can answer that, and then we just sell during the foreclosure process. The assets get sold, right? And well, you can probably address it more than I can.
But typically, from the bank's perspective, when you look at their foreclosure rights, when they take security and collateral, they're not in the business of owning and running business. So what they're going to do, they're going to look for a suitor,
Right.
and then it'll just get handed basically over from you directly to the suitor, and the bank will get whatever's negotiated in the process, depending on the price. That's a more typical. In real estate, that's a little bit different, but that's how banks look at it generally.
But one thing I want to add, though, we try to avoid that exactly because nobody wins, right? So there's a way, and that's we're talking about skeleton in the closet. Tell us, right? No surprises. Tell us the worst thing there is, even if we are already in and everything. We might help you because if you tell us early enough, we can bring other professionals, turnaround advisors, anything to help to save the business. After foreclosure, nobody wins. And Svetlana is right. There's a sale. At foreclosure, it's a sale. There's no holding period. We sell it for the most money.
Well, as a matter of
for the-
fact, you
yeah.
sell directly to the.
Yeah.
Well, and the other, just quickly to elaborate, it's interesting when a bank has a loan with other investors, for example, a hedge fund, that doesn't mind actually holding in business and
Right.
turning it around. You can have a conflict within your investor group for holding a loan, and I've had that happen. So bank was interested. It was a very attractive investment from the distressed fund, hedge fund's perspective. They wanted to, buy that equity at $1. And the bank was like, no, just pay us the loan back. You take care of this business. And there was an internal, so the lender group had to negotiate within itself the outcome that they were interested in together jointly. But it's just to highlight, depending on who that holder is of, and sometimes the bank will actually, I don't know about the relationship bank, but if they see signs of distress, they may just sell the loan because they don't want to deal with it at a discount, and then you'll end up dealing with a hedge fund that has different, approach to holding a loan. And the other thing that I would also recommend from, the corporate finance perspective, when you're dealing with your lender, tell them, you have a covenant violation coming up, it's happening, talk to them. Because there's nothing worse for you than losing trust, because then you can talk about that.
Let me just cut off there, actually. I said obviously we could speak ad nauseum about this issue, so we're going to stay around for another half hour to 45 minutes. We'd love to talk to you more about it, but I really would just like to thank you all for coming. I'd like to thank the Thai group especially for having us. This has been a phenomenal group. So again, we're going to be around, and thank you so much for your participation. And thank you for the easy question at the end.
Yeah, that's a good one.
That was a good one.
Yeah, you've had experience with that, huh? That could be gnarly.
It was a big,
I had experience with the bank.
it was a big restaurant.
Thank you for the answers.
Oh,
That was helpful.
pleasure.
Hi, how you doing?
My name's Amir.
Where are you from?
I'm Russian.
Russia.
Yes. And, my
Thank you for the wonderful answers, Martin. I certainly
Believe it or
will
not.
be in touch. Sure.
So I was like
Some of
wondering
the questions I asked,
This is the
I
Russian
certainly am
side.
looking for
Yeah, and advice is free.
Yeah,
We
I
give it
read
even to non-clients, so don't worry.
Tadim ginako da targata tadim ginako tadim ginako da targata tadim ginako da